Good morning, everybody. Happy Friday. Good morning, Jens. Well, one thing we have to remember, your question is, what's it look like? Back down for some buyers? Well, yes and no. Okay, volume is pretty light. We'll talk about that in a few minutes once we get started. But with the Jewish holidays going on, year over year, the market is kind of upward sloping and range bound. Okay, so mornings pull back, afternoon rallies, and you start seeing the kind of that range as price keeps going up. Okay. Now some days are going to be like an impulse wave and some are going to be correction, but you know, pretty much range bound until Jewish holidays are over. We'll get started right at the top of the hour. I'd like to welcome everybody from on our YouTube channel. Yeah, we're doing live stream on YouTube every Friday. Invite your friends and family. Let's see. Here's the link for the YouTube channel. Want to send it out? That would be amazing. Like, share, and subscribe. You're right. Good morning, everybody. All right, good morning, happy Friday, everybody. Keep in mind, well, let's just go ahead and get started here. We have one of the first things that comes out is there's no job to report today because of the federal shutdown. Okay, and the more the federal shutdown stays gone or going, we may see more and more of that data not coming out. Okay. So be mindful of that. We use that data to see where price intersects with demand or supply. And with the looming the shutdown, okay, a lot of things can be getting ready to change. Okay. So just keep that in mind in the back of your head there. All right, let's take a look around. Yesterday we had one of these picture perfect trade setups, Euro. Okay, Euro came right down, hit the fair value gap inside of the demand zone. I want you to take a moment and look at the chart, okay, the way things are set up. Notice where we have the dead space, and also notice where we have the distribution and accumulation areas. This is a very big piece of the puzzle because when price starts coming back up, it usually travels right through the dead space, so it can increase the potential profit margin potential. Okay, potential. Yeah, I don't see that again 3 times fast. Huh? Anyways, um, when we are assessing how much profit potential in a trade, like if you're going to swing trade or hold a trade um, a little bit longer during a day session and so on, it is vital to have that dead space that occurred as prices coming up to it or if prices coming back down to it. Okay. So the location using the dead space and then up and left, down and left to find distribution and accumulation areas. Okay, so I just wanted to share that one with you because we do teach that in our Mastering the Charts course, Mastering the Charts Part 1. We go into great detail on how to set up a distribution and accumulation area. Mastering the Charts Part 2, we get into a lot more detail on how to utilize the dead space for um, profit potential and identifying the location of where accumulation and distribution should come into play. Okay. So just a textbook setup, want to reiterate on that. Um, I also want to, we have Elite Trader Funding is also doing another Beat the Beast. Okay. And for those that like the challenge of Beat the Beast, um, which it's kind of fun to get in there, you can achieve a funded account in one session by beating the challenge. Okay. Um, really great opportunity to do that. Get a funded account much more quickly than working on it. Okay. So today's Beat the Beast challenge, earn $2,000, realize profit and pass up to, you can use up to 3 fast track evaluations on an existing account or a new one. So all you have to do is make $2,000 in your account today and then submit your proof by 3:30 p.m. Eastern. Um, if you can, if you successfully complete the steps 1 through 3, non-fast track evaluations will be marked as passed between 5 p.m. and 6 p.m. Eastern today. Okay. So a very good opportunity to get a funded account very quickly. And right now, if you also use the promo code TMI when you're checking out, you'll get another significant discount. Okay. I think the eval that I took again this morning was about 36 bucks. Okay. So it's not expensive. Get in there, get that count, make 2 grand on it today, and then move up to the next level where you have a funded account. All right. But make sure you read all the rules and follow it. Okay. All right. Let's get started today. There's we do have multiple economic reports coming out today. Again, they may not come out. I noticed that a couple of them, like employment situation, wasn't coming out. But PMI, ISM, we just got to be prepared because the market will respond or react around those times because people are expecting something to happen. Okay. We do have two Fed speakers later on in the afternoon after lunch. And after that, things should get pretty quiet. I do want to call your attention to this, especially for the people that are trading agriculture products. We just completed harvest for corn and wheat in the northern hemisphere or in the U.S. Okay, so there's a lot of supply. China has not been buying a bushel of soybeans from the U.S. farmers. Okay, so that article has been coming out. This is about the fourth time they've talked about it, and it's not a big headlines one. The headline will be come out probably over the weekend or for Monday's session. Okay. So we have to see that how this impacts supply and demand. It's going to be say, hey, nobody's buying our soybeans, what's going on? We're going to have a lot more supply, so prices can be affected with that. So keep an eye on the agriculture products, okay, the news, also with the lack of buying going on, will impact those prices, okay? Let's see. Overnight session, we did see the US dollar. Just bringing this up over here. US dollar, the 10-year and the 2-year yields, they are kind of quiet this morning. Okay. Usually these get impacted with economic reports. Okay. So I'm monitoring the US dollar because it trades inverse of the euro trade that we're in. Okay. So looking for a drop on the US dollar or to continue to pull back. It kind of looks like we have that rally base and potential drop. And also monitoring the 10 and the 2-year yield. Okay. These do have an inverse relation to equity indexes and the 5, 10, 30-year bonds and notes. Okay. So there may be some trades on those as well as we get started. Okay. So very quiet, but the good thing is that they're all pretty much correlated as far as um, the way that they look in the last few hours of trading. Okay. When they're not correlated, we tend to wait a bit longer before we start engaging in the markets. Okay. When they're correlated, we have some better trading environment. Okay. If you notice, the pre-market trend is trading below 60. Okay. In the pre-market, trading below 60, trend is low, time to go. But having said that, okay, that's the normal saying. That's what people kind of think about there. Notice the volume, extremely light, extremely light. Okay. Now, what this invites, okay, it helps us understand the market conditions. If we have very, very light volume, then the conditions in the market tend to be much more volatile. Okay. Because of lack of buyers and sellers, and they have to go to extremes to find those buyers and sellers. From Wednesday, we had a very big impulse price move that even carried over into the prior session before getting a pullback. It was almost double the daily ATR, almost. I think a little less than about 10 points. Okay. The other thing to notice, as I'm bringing things up here, daily chart, we have 1, 2, 3, 4, 5, 6, potentially 6. Okay, but yesterday completed the 5th up day in a row. Okay. Now, when we watch the daily charts and we count the number of up days versus down days, okay, on the S&P, they generally happen in 2s, 3s, 5s, okay. 8 is eight is rare, and 13 extremely rare. Okay. So we get a lot more defensive. Once we have completed 5 up days in a row, we start to anticipate that, there is a high probability that the 6th day is lower. Okay. If the 6th day closes up, then we have 2 more up days, which would take us into next week. Okay. So a lot of good things here, but today is one of those decision days. Now, with the lack of economic reports coming out, we do have to be a little more defensive, watch the price, manage risk, of course. Okay. We have right now on the S&P futures trading at 3.75 positive. We have, let's see, we got five Dow stocks up over 94 cents, one negative. That leaves us with four. And if we take the four positive and multiply it by two, then we get positive eight. Cash equals positive eight, while futures are trading at positive 3.5. Now, what that just tells us is that futures follow the cash market. Okay. So cash market is implying that fair value or balancing them out would be at 8 points. Okay. So futures, S&P, are oversold relative to cash. Okay. Now that doesn't make a trade. It just tells you that futures are oversold relative to cash. We are an outside day on the S&P. Outside day, but opening inside the prior session's range, which implies that price may come to meet and fill the 5 p.m. gap. Okay. Some folks like to use the 415. Okay. But I use the 5 p.m. close, 6 p.m. open, and that's where we have that potential gap. Okay. Now, either way is fine. Okay. It is a piece of information that helps you make a decision in your trading plan. Okay. So I don't want to get out there and say, oh, well, my way is the right way. No, this is time to explore. And if you feel that you see something that lines with helping you make a trading decision, then track it, document it, verify it, and you will automatically incorporate that into your trade plan. Just as the things that I'm explaining right now, inside day, outside day, okay, looking at cash versus futures, all of those pieces of information in our pre-market routine course, okay, and also the impulse versus correction and so on, okay, they help me make a decision. Why did I want to go short? Why did I want to go long? Okay. All right. Another thing to keep in mind around the Jewish holidays, okay, in this time of year, Jewish holidays, prices tend to stay range bound until after the Jewish holidays. This is something that's been going on for many, many, many years. Okay. So as we look at what is that potential range, okay, we had an impulse, we got a correction, and this is not going to be good because I don't have any two data points there. Let's do this. So kind of looking at where that potential range could be. I mean, we have an upward sloping range. Okay. We're also noticing that historically, when the Fed shuts down or the government shuts down like this, markets tend to rise. This is we've had this is the seventh time since like 1992 that we've had a government shutdown. Four out of those, or sorry, five now out of seven, um, markets have rallied on a federal government shutting down. Okay, they rally before, and then they tend to rally after. Okay, with the S&P, NASDAQ at all-time highs, we do have to pay close attention to that, and we have to recognize that the Russell and the Dow may be trying to play catch up here soon. Okay. I would also encourage you, if you're short-term intraday trading, is to make sure that you are, and even on a larger time frame, depending on what time frame you do trade in, okay, is make sure you identify your market structure so that you're staying on the right side of trades. Okay. Market structure is just another fancy way of saying trend. Okay. I had a couple of trades yesterday. I just knew it was a top. I mean, I wanted to pick that top because I was waiting so long for a pullback. Okay. Um, trading against that market structure were the only times that I netted a loss. Okay. So establish your peaks and valleys. In Mastering the Charts Part 1, we do talk about using a structural pivot point. So how I discern and find my pivot points, okay, is based on a structural pivot. And that we use for our peaks and valleys. Okay, with a structural pivot point, you may eliminate some of the smaller swings in there. All right, let's see. So NASDAQ, we're looking for price to pull back. Also looking for that channel. We can see that the NASDAQ actually has a smaller channel than the S&P. Somewhere right in there. So as price pulls back, we have a 20-minute leg base, which you could reduce the time frame down. And we got 15 minutes before market open. We're close to filling that gap. Now, as you're hearing me get ready and prep, okay, all of these little bullet points are things that help me make a decision. They help me see the overall markets. We know that we have correlated and inverse correlated markets, okay? Why we brought up the dollar and the 10 and the 2-year yield, and that plays right into where we have the 5, 10, and 30-year bonds and notes. Take note, we don't have any economic reports, so it's going to have to be a news event, okay, that comes out or something that the Fed says during their speeches, okay, that's going to pop the 5-year above resistance, okay? But I also want you to notice that when price pops above that resistance, we have a dead space up above, okay? And that dead space, very similar to what we just witnessed on the euro, is that we anticipate price to run through that, okay? So in looking at that, we have this little area where we have a pocket of points, a very strong, fast price move, very little resistance, okay? So as we are setting up today, I'm going to be monitoring throughout the session what happens with the 5, 10, and 30, okay? Because if the US dollar starts to drop and the 10 and the 2-year yield follow along with the dollar, then these are going to go to the upside. We use a lot of correlations. Futures are derivative instruments and they tend to follow the cash market, okay? So well, not tend to, they do, because the cash market is the one that dictates where the futures are trading at. Okay, let me be a little more clear on that. NASDAQ and S&P have nothing up above except for all-time new highs. Dow is really close to that. Russell still has, on a higher time frame, still has a couple of areas, depending on whether you're using a um, continuous adjusted or unadjusted chart. Okay, so make sure you do your homework, understand where the indexes are relative to all-time highs. We are expecting and potentially, historically, prices have moved up with government shutdowns. Okay, all right, let's bring up crude oil, natural gas. Okay, crude oil finally got outside of the dead space, but as you notice on the daily chart, that 50 and the 200 moving average no longer showing that the golden cross is stable. Okay, we're getting close to maybe making what traders call it is a death cross. Okay, now there is some demand down below, and the last time we had that death cross, 50 crossing down through the 200, we had a pretty significant drop. Okay, so all things being equal, go back and look at every time you had a death cross versus a golden cross on the charts and determine the high time frame trend direction. Now, as we are breaking lower, okay, Remember the chart, okay? A little bit of a lesson here. Remember the chart of the euro, okay? Let me bring it back up so you can see it. Notice where the dead space is. Notice the accumulation. Price drops out of that dead space area where orders are being matched up. Sellers, buyers, buyers, sellers, so on and so forth, okay? It drops to the accumulation below the dead space, okay? So crude oil, okay? So we have a daily chart, a similar picture. Where's that accumulation area on the high time frame? Okay. And as I build this out, there's always a little lesson to be learned when we're doing our live trading. Okay. Where is that potential demand below that dead space? We know that above the dead space, we'll look for a supply zone. Okay. A supply zone that is also qualified. Okay. You might have to adjust the time frame to get the right picture. Okay. So for crude oil on this session, I'm still anticipating that price may move lower, okay, but I am prepared for the opportunity to take the trade long, okay. Now, if price is going to go lower, then we need to find an area where we have a place to enter, okay. So we have a fair value gap as price is coming back up to that, and we'll look for the opportunity right here, 6101, 6107. So let's set up our first trade here. That's our fair value gap. I tend to put my stop loss right at candle number 2 of that structure. Okay. And stop loss will be about 61.11. Okay. So I'm going to risk on the trade. I'm going to look for a sell short, 6101. We'll start off with 5 micros. If the trend establishes to the downside, then we'll have opportunity to add on to this position. Most immediate stop loss can be about 61.11. Okay. So that trade is set up. You may want to wait till after market opens, the regular session. Okay. And then we'll use the targeted range about 59.74 to look to take a profit. Okay. Which is pretty low down there. Okay. Natural gas. Whoo, what a crazy morning on this one. Okay. I did get the short on natural gas this morning, picked up a couple $100, which was a nice trade. Um, Price came down, found demand. Let me just adjust a little bit lower. So, okay. Also notice on that gas, the Globex range is wide. Therefore, the bear trap and the bull trap are in play. A wide Globex range just simply means that price in the Globex session exceeds 70% of the daily ATR. We can see if we got 16 cents, we got 11 here, so we're really close to be waiting for that bull trap and the bear trap. Bull trap about 3.463 and the bear trap, which is a zone just below the Globex low. Okay. All right, let's come back to our equity indexes. Things are quiet there. S&P, we are expecting the gap fill. Okay. Price is about to open inside the prior session's range, and very often gap fills the same day. You do have a zone just below that. So if we get a sudden drop in price, notice it's dropping potentially down to finding some buyers. Okay. In that range, 6757. NASDAQ, basically the same as what I just expressed. Okay. Price is an outside day, but opened or opening inside. So we do expect price to move lower to fill the gap. Okay. It's usually right at session open. Okay. And we have a zone just below 25,077, 24,094 in that range there. Looking at the Dow, outside day, hit our prep screen zone. Okay. Outside day, we're opening inside the prior session's range, and we do have a leg base right in that range. Remember the dead spaces. Price tends to go through these areas pretty quickly. You can see that once it was established, price shot down through it and then shot back up. So it's already proven itself that the higher probability is that when price gets into that range, if it starts going deeper into that zone, that it's going to go through and try to find the lower one, which is this prior session's low. Okay. So sorry, the Dow, we are expecting price to come back and close the gap. Okay. And then potentially continue the structured move, making higher lows, higher highs. Okay. And this brings us over to the Russell. Russell has a prep screen zone up there to 2496, 24 or 2509. Big range there. So Russell is outside day and opening outside. Okay. That often leads to a push to the upside. Okay. In this case. So we're not expecting the gap fill. It still could happen, but we're not expecting it right at the moment. Okay. Since it's gapping up and we got 4 minutes to a market session, it's opening outside the prior session's range, usually followed by a gap and run. Okay. Now, taking a quick look over at the exchange traded funds, we want to see how they are gapping. Okay, right now off of the 20-minute chart, they're gapping in the direction of the trend. This is most often associated with exhaustion gaps. Okay. Now, each gap has some personalities. If you have a breakaway gap, okay, that's price breaking away from an existing trend. So you have a confirmed downtrend, price breaking away. Often the price gaps up and then comes back and fills either halfway or so into that gap range. If it's a runaway gap, usually you'll see that markets were consolidated for a period of time, and then once price gaps up or down, after that consolidation, we have what is the runaway gap. And it tends to just keep pushing. So you have to use a technique like fair value gap to splice into that move, because not often you get really great pullbacks or buying on a dip. With price gapping up in the direction, okay, these can be exhaustion gaps. Now, exhaustion gaps are not to be shorted until you start seeing that market structure starts to change. Okay. All right. Let's see. Okay, so we just had soybean meal. It is closed right now, but it's just come up into a fair value gap. We'll see how it looks to open. Might have a short opportunity on that. We got, sorry, soybean meal, soybeans. That's going to be good for cattle, folks. Cheap feed going into winter if the soybean meal comes down. The only reason they would possibly come down is that we have way too much supply. So remember the news we just talked about, okay, about China not buying, okay, that means the US is going to have a lot more supply. Okay, so when price comes up to a supply zone and the news starts getting louder, chances are there's going to be some sellers up here. Okay. Let's see. Gold, We had a beautiful trade on gold yesterday. I know some of us took it right there as price came in. We got a nice move up. I took my profits, and then during that time we had another fair value gap, and we spliced back into it, took another move up, and then I was pretty much done for the session. Okay, and they're off. Let's see what we got going on here. Okay. See how things are going. Looks like prices are coming up. We have made a lower high, lower low. S&P is a little more bearish. We don't have market structure on NQ on these time frames. Okay. We have made hey JP. I'm sorry. I thought I just talked about gold. If you need more detail on it, let me know. Okay. Gold has been pretty bullish on the daily chart. It has opened up in a fair value gap area, has not closed above it, so that lower one is still active. We can look at let's go ahead and take that 904. Sorry, 902.
Order filled.
There we go. Thanks for pointing that out, JP. Okay. And we're looking for price to come back down. We do have a leg base to find some buyers. Let's get our stop loss in place, but keep it a little tight, 905. Next, let's put it back at the top of that range. Okay. Now we do have another opportunity that if we are stopped out of this trade, that we have another fair value gap just above it. Okay. Now remember, you're taking a short trade right now against market structure. Okay. Market structure is another fancy way of saying trend. Okay. So recognize the risk is elevated to take the trade short. Okay. We can look for price to come back down to demand in the context of making higher lows and higher highs, and also in context of the daily trade. Okay. So a short-term trade. We did get filled on crude oil. Wow, beautiful. Look at that tail right there. Just went right into the zone, came right out. Stop loss is in place. Okay. Let's see how that one rides out. Okay. We are looking for lower range down to about 59.74, below the $60 level. Okay. Now with our 5 micro contracts that we took on this one, we are risking about $50 in this account. Okay. Natural gas, no movement there. All right, S&P coming right back up to Lake Base area. Let's take a look at how the stocks are reacting this morning.
Order filled.
Yep. Little volatility on gold. Okay, got stopped out. Get that out of the way. Now, you're going against market structure by taking a short trade. The risk is elevated. Okay. Now you might be able to use this area as a reference point that we're expecting price to change direction or potentially take a profit. Okay, if you're long out of this. Okay. Wait for the market structure to turn on a small time frame to splice into that, give you a little bit better odds. Okay, but you are fighting against the daily uptrend. Okay. All right, so let's back to the S&P. The same thing goes for S&P right now. Okay, on the larger time frame, 20-minute chart that I'm using, we are going against the market structure. Okay. Catch this move to demand. Because there's not a lot of supply. Okay. Okay. Boy, a lot of volatility on the NQ. Much volatility. Okay. Short-term market structure to the downside, you get some small moves. High time frame, market structure is still to the upside. We'll see what we got over here. Okay, the YM retesting our prep screen zone. Taking short trades is going to be going against the overall structure. See if we have any. Yeah, we do have the price coming up and testing the overnight highs. Oh, Russell. All right, Russell coming up to our prep screen zone. Beautiful move on Russell. Mr. Russell's always the last one I look at. But it is hitting our prep screen zone. I'm going to take a small swipe at this. Looking over here at the daily chart to see where we're at. Nice job, baby, go. Yeah, I didn't have any place to go long in that one. Just didn't hit what I was looking for. Well, our crude oil is still working for us. And let's see, we got our next level up here for gold. Dollar's starting to get a little weak, but we're also seeing some discrepancy between the 10 and the 2-year yields. On market internals. Not really going into a buy program or a sell program yet. As we start off the session, looking at the NYSE tick. The trend is in the consolidation area. The VIX is slightly lower, a little bullish indication, but nothing really to make a significant trade off of. Okay, let's see. Where we at here? Okay, so our market structure has changed. Whoa. These are some news. Oh, the Fed speaking. All right, Fed Marion came out. She's on Bloomberg too. Fed should be looking forward. I'm expecting a significant disinflation to service inflation tied to population shift. I'm expecting significant services deflation. Well, that set the tone, didn't it? Like I said, and like we mentioned, pre-market says, what we talk about, I know I reported, Dow 30 stocks, potential volatility around economic reports or breaking news stories. That's what we had to pay more attention to. That might have shaken the confidence of a few folks out there. Even though on small time frame, it's still not giving us a setup yet. Crude oil, did that help us out? No. Gold responding positive to that news. Okay, remember, if you're going to participate in taking a trade on gold, make sure you stay within your risk parameters. Okay, for your trade plan. Yeah, it's kind of nice to, and Liz comment, those comments are no surprise at all. That's the newest Fed member who's massively pro-Trump. Oh, okay. So we'll see how that plays out. We've got to pay more attention when that Fed member starts speaking. Knocking Powell off of his perch, huh? You will notice that sometimes there is certain Fed speakers will have a greater impact than other Fed speakers. Oh, look at that. Why didn't I get on soybean? Soybean meal found our supply, our fair value, and did have a nice pullback out of that. Okay, so well, that was maybe about 3 points, 2 points, 2 points. Okay. Bean oil looking to move lower back to find some demand. Gold right up there at resistance. Russell's up in supply. IWM is still pushing up. IWM new all-time high. So in each one of the trade opportunities, we're looking for now the potential that market structure is going to change. Okay. So to determine market structure, just take your last 3 to 5 pivot highs and lows. Making higher lows and higher highs, trend is up. You look to go long, making lower highs and lower lows, trend is down. And we're looking for selling short. So in the spirit of looking to go long, we need to find a place to do that. And even on these small time frames, I'm not seeing a place where I could splice in to a long without a pullback. Okay. Did we just make a new all-time high on IWM? I thought we did. 247.18. Okay. Yep, there it is. Must have got moved. Thanks, Liz. There we go. Yeah, always verify your lines unless you lock them. Because sometimes they can get moved. And that would give you wrong information. You can use the zigzag indicator, Ken. Thanks for pointing that out. Some platforms have the zigzag indicator, some don't. I find that drawing them out myself takes a little edge off of me trying to get in front of me trying to be too aggressive and trying to force a trade. Okay, so I do take the time and do them myself. I do a lot of things manually, and that's for my own psychology, if you will, kind of slow me down. Been trading a long time, and I just find that when you're educating people and sharing that if they watch how you do it, there are other more simple ways to do it. Okay. And you might find some indicators and oscillators, things like that, that may help you put that information together a little more quickly. But as you're learning and watching price action, watching the markets and what they're doing, and you're drawing along with it, you're training the eyes all the time. Okay. And that's what we're looking to do here. So it's just a preference, but thanks for pointing out that zigzag indicator. Boy, Tesla was looking to gap up. Well, it did gap up like $5 in the pre-market, but it's giving it back pretty quickly. Russell, we missed that entry. All right, now we're just kind of on the equity indexes. We're kind of in that holding mode. until we get price coming back down into demand to splice into the trade. Be careful if you're taking breakout trades. Okay. We've already seen that there's some volatility around the markets because of the lighter volume. Crude oil trade is still working. Let's see, we got yeah, we're recording on YouTube anyway, so we'll be okay. Thanks, team. Yeah, sometimes my team is in Jakarta and in Bali, so sometimes the Wi-Fi is not as stable. So we will be able to post the recording via YouTube since it's recording on that. Yeah. So tell me it's okay. We got it. All right, so let's, wow, what happened to the Dow? You know, NASDAQ has been kind of the weaker one out of all of this. Strong moves up, good market structure on the Russell. We just have to find a place to get into that market structure. Hey, I'm on the sidelines. We just have crude oil in play. You still in that trade, AB Go? That was beautiful. Nice entry on the S&P for you there. Didn't reach my entry point. It does look like the markets are going to start taking out new highs again. All right, let's take a look. We got S&P futures are up almost 20 points, 19 quarter. We have one Dow stock negative over 94 cents, and we now have 14 positive. Okay. S&P futures still oversold slightly relative to cash. Also taking a look at Nvidia and Apple, two large market cap weighted stocks, they're going opposite directions. Okay. When Apple's going up, Nvidia is going down, or vice versa, and you can interchange Apple with Microsoft. Okay, when you start looking at the large market caps. Okay, Microsoft is one of those that's kind of borderline. I think it's a little more market cap than Apple at the current moment. Okay, so my three main directional indicators for the equity index, S&P and the Dow mainly, are going to be Microsoft, Apple, and Nvidia. Okay. So when Microsoft and Apple and Nvidia are all going up, then the market is pretty much in a strong uptrend. Okay. When they start getting mixed, it's time to kind of wait for price to return to and be prepared if you're already long that things could change a little bit. Meta continues to move lower, down $10 on that. Tesla gave back all of its 6 points it was up in the pre-market. Alphabet down 4. We got Broadcom up. Nvidia's coming down pretty good. Apple's holding on, and Microsoft. Okay. So we've kind of gone into that time. We're just about to the top of the hour where we will see that potential 10 a.m. reversal. All right, dropping back down to smaller time frames here. I'm looking at the 3-minute chart to find an opportunity. The higher time frames, we do have market structure to the upside. Okay, so a pullback, and we're going to look at this little level here, 67.75. This will be where we have that fair value gap as price market structure changed. And that'll be one of the first places we target to continue the uptrend. Now we're going to monitor NASDAQ, which is on the other chart. Okay. NASDAQ is taking a pretty big nosedive right here. Okay. Must be some more news. We're looking for S&P coming down 67.75. Some big ranges here too. So my computer's slowing a little bit, so I'm going to stop the video, but we'll keep the show going. It's kind of monitoring all the markets. We're not close to we're not at a level to get a trade yet. I'm watching such small time frames, trying to find a place to splice in. I do toggle between a tick chart and a time-based chart. Woo! NASDAQ just filled the gap and just took out that zone right there. ISM services, which came out. Didn't think they were going to report that. Well, we do have a change in market structure, but no commitment yet. We've made a lower low, but not yet a lower high. Okay, let's get back out to the larger time frames here, see where we're at. Ooh, here we go. We're right in that area where we could anticipate a bounce here. S&P still needs to make it down for the gap fill, not close to the zone. And of course, the structure on the Dow, we're looking for the pullbacks. We can have an opportunity to splice into that. Okay, so upcoming, looking 24.90, 70 cents on the Russell as a retest to continue the market structure to the upside. 2487.60 would be the distal line of that. Okay. Dow 46,900 area, 46,850. Looking for a pullback down there for the opportunity to splice in to that. NASDAQ is wiping out some of these small time frame areas. Market structure has, looks like it's starting to change, but only on the small time frames. Then we have Apple and Nvidia kind of going in the same direction. Whoa. I'm a little late on that one. Wow, the gold was a nice little play, wasn't it? And we still have our crude oil. Now, gold was a great picture of a fair value gap working. Okay. As far as taking a trade on that, it was elevated risk because you're going against the overall trend, especially daily chart and so on. So it's counter trend trade. Often a counter trend trade, you're looking at 1-to-1, 2-to-1 type trades. Okay. As long as you're aware that you are taking counter trend trades, okay, you treat those a little differently than you're treating a trending trade. Okay, S&P is coming up, back up to that. I just don't have a commitment of a downtrend yet on the S&P. Even on a 3-minute chart. Tick charts did take out the prior swing low. If we make a lower high, we'll be changing market structure. Wow, nice move on that. Team says, look at HG. Woo! To the moon. Wow. Did you take that one, team? Wow, metals are rocking. Okay, be watching the NQ. Need a little more commitment that we're going to go down. We're out. I'm just trying to find my way into these. Just keep setting up your charts till you get your trading plan and Tesla's tanking here. Tesla and Meta. Nice little bounce off of the zone we had on the NQ. Let's see if it breaks above that. And here we're just sitting in our quiet crude oil. Oh, crude oil. What happened there? Hasn't stopped us out, but these markets are kind of crazy. It's just when you start get settled into a trade, it rips right against you. Yeah, see the difference between like using a 5-minute chart versus using a tick chart. The ticks are based off of transactions per bar, certain number of transactions that you choose based on that vibration you like to trade in.
Order filled.
All right, NQ is coming back up. Let's set this trade up there. Coming in just slightly below that. 25,112. Yeah, we are pushing all-time high on the Dow. To the moon. Alphabet, Meta, Tesla. Looks like Broadcom might be the next one. Yeah, if you had the zigzag tool doing this, you wouldn't have the fun of updating your charts every few minutes, you know? Boy, and Q got really close, but no cigar. So you notice the price reaction. I mean, you're seeing a time-based chart in the back, okay? And you're seeing a tick-based chart on the front. When the tick-based chart looks more smooth, more consistent than the time-based, chances are there's lighter volume, okay? Less transactions going on, okay? Yeah, I'm trying to hold off here instead of jumping in front of it. Okay. S&P's at all-time highs again, or close to it. Okay. And this would be more or less picking a top without having lower highs and lower lows going for it. Okay. So if you are picking that top, let us know. We'll be watching. Okay. Notice the volume on the S&P futures, number of contracts, 300,000. Is that high volume or low volume for this time of day? Okay. Ooh, nice trade off gold. That gas right in the middle. We were stopped out of crude oil. I'm still bearish on it, but I don't have a really good spot to take a trade on it yet. We've made a lower high. Feel like I've been chasing my tail all morning here. But having a trade plan and staying out of the market when your setup is not there, okay? And it is your setup, it's not somebody else's. Somebody else may trade this much better than what I'm doing right now, but I'm waiting for price to intersect with my plan. I'm trying to get the market structure, a plan that, if we're going to go short, I need my small time frame charts to be showing that direction. Okay. So your trade plan is your trade plan, and the information you collect and the information that you use to execute on your trade plan, make sure you're following it. Let's see, we had 1, 2, 3, 4, 5. So yesterday was the 5th up day in a row for the NQ and for the S&P. So today was a high probability that we'll have a down day. And if the S&P closes positive today, then we are looking at 2 more up days. This will be Monday, Tuesday before we get a correction. S&P is right back up in the area. Tick charts give me a whole different picture. Gonna keep a close eye on NVIDIA. Watch Apple and Microsoft. Right now, Apple and Microsoft are still showing a strong 90-minute candle bullish, while NVIDIA is showing a bearish one. I'm going through all my charts, trying to find where we're getting close to an entry. One of the hardest things traders have to deal with is, once they have a trade plan, is sticking with it. Now, these levels, these are fair value gap areas. When the market is running and you're looking for a pullback, these are areas where we would anticipate of either a profit objective if you took the trade short, or we'd be looking for price to bounce off of these areas and possibly keep going with the trend. Now, just a little more of a lesson here, okay? When we talk about impulse versus correction, okay, today's range, okay, we got the daily ATR of 411 points on the Dow, okay? And with that daily range, 411 points, we got an impulse. And then what happened after the impulse? Price chop sideways. Then we had another impulse. What happened after the impulse move? Price went sideways. Today's action, we got another impulse. So what is the possibility of us going straight back down is pretty low, okay? We're going to anticipate there might be a correction, but a correction does not mean that there's a trend change, okay? Now off this 5-minute chart, just going from high to low on this last swing, we can project up and see, are we getting to an extreme using Fibonacci price extension? If we have a down day today, then we would anticipate Sunday night, Monday morning to be down. Okay. Now the price is extended beyond the 314 extension, so I'm going to include these to see where we're at. And we're getting into a very big extreme move on the Dow. Now, what else can we use? Well, I can go out to my higher time frame chart and I could add on here to see when things are getting too extreme. We could use a Keltner channel, ATR, Bollinger Bands, okay, all the above. So when we look at an extreme move like this, and the Fibonacci extensions, they are helpful, okay? But also recognizing that the extremes are present, we're outside, way outside the Keltner channel, okay? Let's check the Bollinger. Okay. Bollinger Band, we're not outside. We haven't closed outside on a 5-minute chart, but boy, it is pegged up, and we do see where that 20 exponential moving average is. Okay. Now, price is not intersecting with the supply zone. Okay. But we're recognizing we're getting some extreme moves. Okay. The trade opportunity occurs when price is running into supply or running into demand. Okay, we don't have that extreme move running in it. When we get to all-time highs, it is a little more challenging for that. Oh, we missed that entry. Where did I have it? I have 4 more points. Okay. Is there any news supporting this, or is this just from the earlier Fed speaker? And this might be confusing for a lot of folks out there with what NASDAQ is doing. Okay. Okay, S&P is back up at resistance. Now let's do this. Okay. We have enough swings on this time frame. And we're just about out of time. All right. So we're looking for where we got resistance. And I'm going to put, we're going to look at some Fibonacci price extensions. We're going to use the last 3 completed swings. Okay. I'm going to look for a confluence level where we have multiple overlapping areas. And it looks like we're running right into that. Let's see where we have the most dense area. Okay. Then they get a little spread out up above. Now these techniques, they do take some practice. They do take some time to learn. Okay. A lot of little lessons to get up to this level of understanding how to use Fibonacci price extension. So we'll target that 6790, 6792 area as if price continues to keep going up, that's going to be one area where we might see some weakness. Okay. It's a projection, a projected move. Okay. We can use the time variables. Time, where's my Fibonacci time? There it is. And we can go from valley to valley or peak to peak to see when in time that should come into play. Okay. There are some really fascinating techniques out there that are not widely talked or widely used. Okay, because it does take a lot of, like I said, some small lessons in there. Now, this is a place I'm anticipating a turning point. It is not a place to take a trade. Again, we'd be going against the market structure, which is very costly. Okay. We need to and see if we are looking for that turn, and the turn does happen, and then we get the market structure to commit with it. We'll have uh, a good turning point. Okay. All right. Well, not a whole lot of trading today. Okay. We did have one that we were in, Euro, as we're playing through the dead space here. We're not in anything else. But markets are getting extended as we just talked about. NASDAQ is doing almost nothing compared to what the S&P, the Russell, and the Dow are doing. Okay. Take your time. Be careful about trying to counter trend trade. Just a reminder that we do have the Beat the Beast challenge. Okay, so make sure you're using the TMI as your promo code. Okay, the Market Institution promo code. That'll give you an opportunity. If you make $2,000 on that account today, or an account that you have open already, submit your proof and get that account funded right away. Okay. Looks like S&P is coming right up to that first area. Okay. Have a great weekend, everybody. We just trying to stick to our discipline. We didn't have a whole lot of trades today, but that doesn't mean the day's over. Okay. All right. Thank you, team. Thanks, Harvey, for jumping back in, taking care of us. I'll be over in the Discord room in the voice channel in about 5 minutes or so. So if you guys want to join us over there and just kind of hang out and chit chat, share recipes, talk about trading, I'll be over there in our Discord room. Okay. And if you'd like to join us in our Discord room, team, can you post the Discord invite in the chat for people that would like to come in? Okay. I'll give you just a second. Discord is a chat room, JP. Yeah, there, if you click on that and just kind of go through this, you'll arrive at our chat room. And hopefully we'll get some more trades here right around 11 a.m. when the banks and institutions complete their order flow. Okay. And if you look at the very bottom of our Discord room, okay, we have a couple of different things here, but right at the bottom, we have our active income trading, which is a voice channel, and that's where I'm heading to. So if you have any questions, want to talk, want to share trades, it's there for everybody. Okay. Have a great weekend, have a great day, and we'll see you guys on Monday. Bye now.